Hey, good afternoon, everyone. Welcome to our webinar, How to Build a Winning Pitch Deck, presented by Early Growth Financial Services. My name is Jason Kennedy. I'll be your moderator and your guide through the webinar today. Just a quick couple of notes before we get started. This webinar is scheduled to last approximately 60 minutes with time for Q&A at the end of the presentation. We have a questions panel within your GoToWebinar console. You can use that panel to ask questions throughout the presentation. We will jump in and answer those questions as appropriate during the deck, and we will answer as many as we can afterwards during the proper Q&A period. So again, that's the questions panel in your GoToWebinar console. So real quick, before we jump in, I want to introduce our two presenters today, both from Early Growth Financial Services. I'll first start with Sirk, Consultant CFO, based out in the Bay Area. Sirk, take a moment and say hello.
Hello, everyone. Thanks for joining us.
Thank you very much, Sirk. And also from the Bay Area, Alaa Ismail, from another Consultant CFO, as part of our awesome team. Alaa, please say hello to the group.
Hello, everyone.
Awesome. So real quick, just to give you the bona fides about Early Growth Financial Services and what we do and why that pertains to what we're talking about today. We service 18%, roughly 1 in 5 of the venture-backed startups in the United States. And we do that by providing outsourced accounting services, tax consulting, financial consulting, business valuations, for early stage companies and micro VC or early stage investment funds. So we've been in business for almost 9 years now, based in the Bay Area, with boots on the ground in Los Angeles, Seattle, Chicago, and New York. And as you can see there, we've worked with several prominent companies across a variety of industries. So we've been working with early stage companies, both pre and post funding, on a variety of accounting and finance needs. So that's going to be our segue into what we're talking about today, which is specifically building the pitch deck, which is going to be a key component of helping you land the funding you need to properly scale your startup. So starting with the overview, and Sirk, I'll kind of pitch it over to you. Let's start by just the high level basics of what founders should know about and what they should be working with when they start to put this deck together.
Yeah, thanks, Jason. And again, thank you everyone for joining us today. We're going to be talking about kind of the pitch deck, and this is just a brief overview. And then at the end of the presentation, we'll have a few tips along the way in terms of actually doing the pitch, or as you're getting ready to do pitches in front of investors. But for the pitch deck itself, the main thing here is, if you think about kind of what the goal is to communicate a message, to make it exciting, to make it sellable, and really to get you to the next step, right? Which is that you're going to be presenting a pitch deck in front of investors, and what you want, the pitch deck itself is not actually going to sell the investment. You're going to sell the investment, and there's going to be due diligence, but you just want it to be strong enough for them to be excited and for them to take the next step, which is to do additional calls and follow-on discussions with you about an investment. But really, one of the things that I try to tell people is that it's our baby, right? It's our company. We know a lot about the industry. We know a lot about our company. We know a lot about what we're trying to do, and it's very, very easy for us to start getting a little bit detailed in our pitch deck, because we want to explain everything. We're proud of our company and what we're trying to do. The one main thing that I try to tell people is you really, really have to keep it high level. You have to keep it simple. Here we say keep it simple, 8 to 10 pages, 24 to 30 font. There is a rule of pitch decks that was penned by Guy Kawasaki, a very famous entrepreneur and investor here in the Bay Area, and he used the 10-20-30 rule, which is 10 slides, 20 minutes, 30 font, right? So nothing less than 30 font. The presentation should take 20 minutes for you to go through, and it should be 10 slides, or basically two minutes per slide. And the reason why you want to keep it to 20 minutes is because they're going to probably give you an hour, but you kind of expect that it's going to start a little bit late. You want to allow a lot of time at the end to actually allow for questions and answers and discussions, because that's really going to tell you really what the level of interest is and the things that you need to answer as you go forward. So if you kind of keep it at that level, then I think you're probably doing a good job in terms of the actual presentation. You don't want to have it too wordy. You don't want to have a bunch of bullet points that makes it hard to read. You certainly don't want to be putting in any Excel spreadsheets. Although as finance guys, obviously we love Excel spreadsheets. Wherever you can do a simple graphic instead of using bullet points or using charts instead of spreadsheets, you absolutely should do that, because that usually, if you're able to put together a good graphic, that tells the story much better than 5 or 6 bullet points is going to do. And then finally, the one thing that we recommend is test your pitch, right? Test the pitch deck. Make sure that you're able to go through it in a 20-minute period. And if you've done a good job of effectively communicating what your message is, then people should be able to come back after you do the pitch and basically be able to explain back to you what your company's about and what you're trying to do and what your mission statement is back in 1 or 2 sentences.
Yeah, and if we didn't hit you over the head enough with it already here in this first slide, the idea is to keep it simple, with everything that you're doing and putting this together. And just as a callback to what Sirk had mentioned there about Guy Kawasaki, we'll give him a quick plug for his book, The Art of Start. I think it's actually Art of Start 2.0. It's in a new edition, where he goes into a lot of detail about scaling your business. And he talks a lot about the pitch deck specifically and the 10-20-30 rule that Sirk mentions there. So moving on, kind of get into it a little bit. Alaa, let's just start with the beginning, like telling, at the high level, what is it that your company does?
Right. Thanks, Jason. Yes. So this slide here is really the first slide that you typically have in your pitch deck. And I think we've all heard of the elevator pitch, but just to kind of reiterate it, if somebody asks you, what is the company that you're starting? What exactly are you trying to do? You're not going to get into an hour discussion about the details of your product or your business model. You're going to give just a brief snapshot that kind of encapsulates your mission statement. And that's really how you should start. Perhaps a page with your logo on it, anything, kind of eye-catching, and then just a brief sentence or statement of what your company will do or what you're planning to do in your new enterprise. And that usually then starts the conversation and then leads to a whole host of questions, from the get-go. So remember, your first impression is really, really important. So keep it succinct, to the point, and then also try to make an impact with your opening statement. Is really typically what I tell folks that I work with in preparation of their pitch deck.
My favorite tagline I think of all time, because it's so easy to remember. We all know it, and to me that is the ultimate driving machine, right? So if you hear that, it's 3 words, right? But it's BMW. And it's just so it's telling, it's descriptive, it's exciting. It makes you want to ask, okay, tell me more about that. And so something really simple, catchy, something that people are going to remember, and something that's going to pique their interest to hopefully find out more. And that's kind of the goal for a tagline, as well as a real quick elevator pitch.
And from the marketing side, I can say that it's very easy when you're coming up with this tagline to fall into the Uber for X trap, where you just, it's just like, okay, it's on demand, this or that or the other. So if that's indeed what it is, like, take the time to get, as Sirk and Alaa both mentioned, get a little creative with it, and try to find a way to explain it that isn't using someone else's existing business model. Like in a quick discussion that can help you out. I'm Uber for XYZ, but in the event of a formal presentation, taking the time to show that you come up with a unique and creative way to express your service, your idea, your product, that's going to go a long way in this presentation. So, Sirk, let's talk a little bit about identifying the problem before we jump into what the service is, the product, the solution, all of that fun stuff.
Yeah, this is a key slide and a key question that we need to ask ourselves as entrepreneurs, because obviously any solution that we have has to address a problem, right? The history is littered with companies and with ideas of great solutions, great products that just didn't solve a problem that people had, and so to communicate the problem that you're facing, that you've experienced, that other people have experienced, to be able to succinctly put that onto a slide. And here, I would definitely say that a graphic or a picture is very, very helpful. If you can kind of think about kind of like whether it's a process, and you think about kind of arrows and what people have to do today, what are they doing today to address the problem? And that will kind of lead us to a further discussion about what our company does and where we fix that problem, right? So it may be a service where we're trying to fix inefficiencies. We may be a product that is for something that people want or need today that's not available. It may be a better way of doing something that other, maybe older companies have been doing up until now. But it really, you have to be able to convince any listener, any investor, that there is a big problem that needs to be solved, and we're the ones who are going to solve it. And one of the first things, we talk about the problem and the size of the problem, but to the extent that you can sow the seed of how big that problem is, this is the place to do it. And once you actually have that kind of understood by all parties, including the investors, then you're off to a great start, because then obviously we're going to be able to find a solution for it. A lot of tech companies, obviously, who are raising VC financing and who this presentation is geared towards, they're doing something complex. And to the extent that it is something that is not well known, it probably should require a little bit of contextual discussion on the front end, just to make sure that everyone's on the same page with regards to kind of what you're trying to do, and make sure that make sure that we don't go into this kind of problem identification where people are still kind of asking the question after the fact. I'm still not 100% sure exactly what we're trying to do here. So just make sure that first and foremost that everyone understands what the problem is.
Yeah. And Sirk, this is the one slide that I typically notice that either captures the audience's attention or actually quickly gets them unfocused or disinterested in the presentation. So I think this is a really, really critical slide, because keep in mind that the folks that you're pitching to probably see, X number of these on a weekly basis. So the identification of a problem in a way that really triggers their excitement or triggers their attention is really key. And keep in mind that they may have listened to 2 or 3 other pitch decks that address a similar problem. So to the extent that you could differentiate or excite them in this slide, then I think you'll have a big advantage.
Yeah, I've seen too many pitch deck presentations go awry from the very beginning, because it's like, again, as founders, as entrepreneurs, we understand, right? We know this problem cold inside of our heads and inside of our hearts, and so it's kind of easy to just kind of gloss over that and say, hey, we're going to focus on the solution part of it and why we're the best ones to do it. But yeah, you absolutely, the investor has to get this feeling of, yeah, that is a problem. Either I've seen it myself, I know other people who are experiencing it, and if you get that, then I think to Ala's point, you're gonna have their attention throughout the presentation to see if we're going to be the ones who are going to be able to solve this problem.
And, context, as you said, Sirk, is very important here. So, if you're struggling with that, just keep in mind, analogies or simple stories, something that's quick but can paint a picture for, these investors that may not necessarily inherently understand what it is that you're trying to solve. That can go a long way to, as Alaa mentioned, kind of grabbing their attention and pointing us in the right way. So, speaking of which, Alaa, let's talk a little bit about the solution that this particular pitch is going to provide and the secret sauce.
Right. So you've now addressed the problem, or how your company is going to address that problem. Now, what is it that what you do is different than maybe the 5 or 6 other solutions that the audience has heard? So really, this is the secret sauce slide. This is why you think you're going to be successful where others have failed, or why your solution is new and groundbreaking to the industry, or why your technology is different than the other technology. So here is really where you justify the problems that you've addressed in the previous slide, and show the audience really what you're going to do to fix it, and how you differentiate yourself perhaps from either competitors, or solve a solution that's currently not in the marketplace. So this is also a really, really critical slide, because now you've captured the audience's attention, and you've given them something to really hang their hats on, and to continue to listen to your pitch. So this is a very simple slide. It usually may involve, if you're building a technology, it may get a little technical here. You might want to include some graphics or some words that relate to your technology, without getting too wonky, because 9 times out of 10, you might have an audience that understands the market, but may not really be in the detail of the technology, or as versed as you are in the technology. So don't get too technical here, but present enough detail so the audience could differentiate you from others that they may have heard, or get really, really excited about your solution.
And one other thing I'll add to this is, if you've done a targeted search, and if you've sent out this presentation to the right folks, the potential investors who might invest in your company, and obviously you've got their attention enough so that you're actually doing a pitch to them, then this is probably either an industry or an area or a focus that the investor already has some amount of knowledge in, right? I mean, you may be doing something brand new, in which case obviously it's a different story. But in most cases, we find that VCs tend to focus on specific industries, segments of the market, and when you identify those and you send this out to those VCs, then they're gonna either already be talking or knowledgeable about kind of what you're doing, and with potential other companies that are potentially investment vehicles as well. And so being able to not only talk about about what you're doing, but also about kind of what that special thing is, right? What makes you special? What makes the company special? Is it specific technology? Is it specific knowledge, right, that you have, and not only you have, or that you have more than other competitors? Is it patents? Is it whatever it may be? Those things that are going to be the secret to your being able to be singled out as the company to invest in this space. That's what you need to identify here.
So one of the things that we've been I'm sorry, Jason. Like, I have one more point here, but one of the things that we're kind of gonna impress upon you during the whole discussion on the pitch deck is being prepared. And one of the things that we always say is that have the person that's giving the pitch be the best pitcher. That said, the person giving the pitch may not be the technology wonk or the person that understands your secret sauce the best. If that is the case, make sure that that person is in the room, because while in a lot of cases the audience may not be technical, in some cases they may be very technical and ask you some really pointed technical questions or detailed questions. So have the person who knows your product or knows your solution or knows your technology in the room in case these questions are asked.
So while we mentioned secret sauce here, I think it's a good time to kind of throw the question out to both of you around NDAs. Do you typically, we get that question a lot from early stage founders, but do you typically see investors that will sign an NDA before a pitch? Sirk, I'll let you answer first.
I have not seen one investor who will sign an NDA before a pitch.
Same here. And if it's a formal, especially if it's a VC investor, if you come in walking with an NDA first, that kind of tells them that you probably haven't pitched to other VCs.
Yeah.
Gotcha. Great point there. Thanks, guys. So moving on, Sirk, let's talk about introducing the team.
Sure, and obviously this is critical. You know, from both a technology side, if it's a technology-based company, as well as on the kind of the marketing and the industry experience side, you know, with regards to relationships and sales and business development. You know, clearly, you know, they are investing obviously in a great idea. They see the problem that you've identified and they're being asked to make an investment. They're not going to be investing in a product. They're going to be mainly investing in the team, right? Because you're going to impress upon them that you are the right team with the right idea to be able to, you know, get the returns and be successful in the space. And you know, we all know that, you know, the key to a successful company mostly resides in the quality of the team. And so this founding team or this executive team that you're going to be presenting to the investors, you know, you need to obviously show them what kind of experience base we have, what kind of expertise we have, anything specific, any relevant, you know, previous roles with companies that are, you know, in similar spaces, so that, you know, we can say that, you know, we've cut our teeth and we really understand the space well because we've been, you know, living it for the past 10 or 15 years in these companies. All those will go a long ways towards, you know, at least passing the initial credibility hurdle of why we're going to be the right team to be successful in this space.
And it's really amazing, Sirk. I'm not sure if you've had the same experience, but in passing along pitch decks to investors, inevitably the first or second question revolves around the team, and it usually is, you know, how's the team? Are they rock stars? And it's not a requirement, but I've just seen it so many times that if you present a previously successful team or a team that the investor recognizes, you get a lot more traction and they start listening more. So if you have a good team in place, make sure to play it up, because that gets heard.
No, I absolutely agree with that, and you know, to the extent that you can put the amount of experience or the specific accomplishments, any big specific accomplishments that have been achieved by the team members is particularly in this space. Because here's the thing, if you think about it again from an investor standpoint, right? And maybe you've been through this, maybe you haven't, but you know what? Inevitably, we're going to be making changes, right? So the product or the service or the technology that we're offering, it's going to morph, right? The business conditions are going to change, the market conditions may change, our technology may change. But over time, we will be making some changes and pivots along the way. And so, if we're actually just pitching an idea and a technology, then then investors are going to be worried that, look, we're not experienced enough with this industry or in this space to be able to make good decisions, because we're married too much to the idea or the technology, as opposed to the market and the problem that we're trying to solve and the best way to solve it. And all that requires judgment and experience. And so that's kind of what they're going to be looking for when they look at your team, to determine if it's the right team that they're going to be investing in, as opposed to a product.
And the one kind of point on this slide, strategic advisors, that's a very, very important point as well. It may not be part of your management team, but if you have somebody that is notable, especially into the industry, as an advisor, make sure to play that up. Especially if Elon Musk is part of your advising team or somebody like that, that you make sure that gets in there, because that also lends a lot of credibility to your pitch.
Now, we had a question come in kind of around this topic, but just around the deck in general. Do you guys find, or have you guys seen instances where investors will ask for the deck prior to the meeting? Sirk, I'll throw it to you first.
Yeah, we absolutely do. And again, that's why you want to keep it simple. You want to keep it high level. You want to pique their interest. You should be able to get a message across, right? But really not. But where you need to be in there pitching it to really get the message through. But yeah, we absolutely see investors asking for the pitch deck in advance.
Yes, same here, and you shouldn't be afraid of that, because quite honestly, the items on the pitch deck is not what is really important. Typically, the important items happen in the conversation that is around the pitch deck. Remember, like what we said in the beginning, keep the pitch deck simple. If it's simple, that means it's not cluttered with a lot of details, because it's really meant to spur a conversation, and having somebody get your pitch deck before may accelerate that discussion. Really, the successful pitches happen verbally, not so much in the on the slides.
Absolutely.
All right, so let's jump into the market and our favorite three areas: TAM, SAM, and SOM.
Right. I'm going to start just kind of briefly. I'm sure everybody's familiar, but briefly describing by giving an example, and then I'm going to put a caveat at the end of it, so that throws a little bit of a twist into things. So when you're addressing the audience, you've already given them your product pitch, why you have a secret sauce, and why you're going to be successful with your solution. Now you want to start getting into the money aspects. What is the market that you're going to be addressing? So typically that starts with a TAM. That's the total available market. So if you're making jeans, for example, and a new awesome pair of jeans, your total available market will be the jean market, maybe throughout worldwide. And that might be relevant to your discussion. So it gives kind of an overall, 3-mile view of the market that you're trying to address. Your serviceable market is really the actual market that you could reach. So in the example of a jeans market, it may not be relevant for you to sell jeans in Europe, for example, or so really the market that you're going to service in your product offering. So make sure to relay that to the folks listening to your pitch. And then from the addressable market, really, who are you going to service, at least in the short term? So going back, maybe you're going to be addressing the US market as your serviceable, addressable market. But you really can't reach them right away. So what can we obtain, or what is the short-term vision of the market that we're going to address, and that could be the largest 3 metropolitan areas that in the gene market in our example. So give it a little bit of a perspective of who you're trying to sell your product to, or who's going to be the market that you're going to address. Part of this also involves the sales channel. So as part of this discussion, you're going to briefly go over how you're going to address this market. Are you a SaaS company? Is it just going to be your website? And here's the target audience from, for your SaaS product, or is this a manufacturer product that you need, either retail outlets or distribution of some kind? So all that is part of this market opportunity study, and gives the investor an idea of how credible you are in your business model. Now, the caveat that I wanted to kind of say is that I've seen so many pitches where this slide is addressed with, I'm going to sell something into China. There's X billion number of population in China, and we're going to address 2% of that population. Those types of analysis, market analysis, lose credibility to a savvy investor right away. These kind of top-down approaches with percentages, if we could just address 1% of this market, we'll be successful. That's not typically what an investor wants to hear. They want a little bit of thought behind your market opportunity analysis. So keep that in mind when you're preparing this slide.
Yeah, I agree with that 100%, Alaa, and I think that's a great example. The genes market. There's a couple of things that I like to add in here as well, and I think if we can kind of go down, right. So you see that pictorial is perfect, right. So the light blue area is obviously the TAM, the SAM is the dark blue, and then the black dot is the SOM, or the serviceable market, and invariably, right. So that's the size, right. And if you say you're going to get 100% of one of these, then maybe 2 circles are the same, but that's basically the size. And so what we really want to do here with this market opportunity slide is, yes, we want to talk about the serviceable, obtainable market, because that's the market that we're going after first, and that's what we're building our financial model on initially. But what we really want to do is we really want to whet the appetite of the investor to say, okay, we are running our analyses. We are doing a bottoms-up forecast on our financial plan to be able to attack the serviceable obtainable market, or SOM. And based upon those numbers, here is what we can do over the next 18, 24, 36 months, right? But what we really want to do is we want to get the investor excited about the SAM and ultimately the TAM, right? What happens if we become a major player or a leader, right, or the leader in this space, right? What kind of market opportunity do we have? Is this going to be a nice double or a big triple, or is this going to be a huge grand slam type of opportunity, right? And so we want to, without running numbers and without really kind of making any kind of commitments or projections about where we're going to be 5, 10 years down the line, we want to whet the appetite of the investor to talk about or to have them think about what the ultimate opportunity might be if we're successful, because that's where they, get really, really excited about a big opportunity.
And I'll add that a trap that entrepreneurs fall in sometimes here is making the serviceable obtainable market match the total available market. Rarely, if ever, is that the case, that if you're an early stage company coming in for an investment, that those 2 things are going to match. So if you come in using the genes example, is fantastic. If you come in as an early stage company looking for $500,000 investment in order to obtain the 6 billion people worldwide genes market, your meeting is going to end a lot faster than you had anticipated. So it's very, very important to make sure you're being realistic with this, using the methods that Alaa and Sirk just spoke to, so that it shows that you've done your homework and what you're up against in the market when you're speaking to these investors.
And yeah, thanks, Jason. And you know, one question that we get a lot, especially on this slide, is the whole trade-off between being reasonable and bottoms up and what could we really do versus kind of what kind of numbers do we need to show, right? On a slide like this to get the interest of an investor, right? The investor is not going to be interested in a company where we're growing revenue by 20% a year, like a lot of mature companies or industries. So there is that bit of a trade-off, right? And what I tell people is, look, obviously we're not here to be messing around. We're here to dominate. We're here to be successful, and we should be aggressive, right? We should be aggressive with our assumptions with regards to what we think we can do and why we think we're going to be successful. However, it has to be grounded in reality in terms of the actual size of the market that we're going after. If we overestimate, or if we're nudging things, so that the market size is much greater than what we can either prove or intuit, or where the investors are questioning our assumptions about how big this market is, we're gonna face we could potentially face a credibility problem from the very, very beginning, and that is something that is hard to overcome, right? And so yes, we want to be able to back up our assumptions about what the size of the market is, and then show our plan to attack it, and to show kind of reasonable but still aggressive penetrations, such that the financial model will make it very, very appetizing for the investor as well.
So an interesting question that came in on this from the audience. Some VCs like to see the market size or market opportunity actually on the problem slide. Have you, I'll ask you first, have you ever seen it set up like that, or had investors ask for it in that kind of format?
That is actually a very good observation. Yes, I think a lot of times there's factors in your presentation, or there's areas in your presentation that are going to cross over. So market size, or available market, or distribution issues, technology issues, all could be part of different as parts of your slide presentation. So yes, in the problem that you're trying to solve, or your business differentiation, you could put in market issues as well, as part of your your presentation. So yeah, I don't think there's a set rule that certain subjects need to be discussed only in these sections of the pitch. If it makes sense, and if it helps you present a better picture in the problem slide, then by all means include it. I mean, the idea here is not to be get an A+ in pitch presentation, but really to give an effective presentation and to spur interest from the potential investor, so they're excited about your vision just as you are.
Yeah, I agree with that, and yes, I've seen it, particularly in industries where it's a massive problem, right? And there's tons of money being spent trying to address it, and maybe we're going after a little bit of it, but yeah, if it helps tell a story, as we talked about, that problem slide is kind of a key one to draw the attention of the investor, right, that we're pitching to. And so to the extent that we can throw a big number out there in terms of the actual potential size of the market, and what the potential opportunity is for someone who's able to fix this problem or solve this problem, sure, absolutely, we should start off with that.
I think the important thing, right, is to be able to speak to it. If you're going in unsure, if you've got it formatted like this, and then all of a sudden during the problem slide, the investor goes, let's talk addressable market while you're on the slide. I think the important thing is to make sure you can speak to that, even if it's a few slides further into your deck. Because, Alaa, as you mentioned, a lot of this content in the deck is intertwined. So there could be instances where you've got to do kind of a callback to something you've spoken about already, or the investors could jump in and start asking you about something that's maybe still a few slides away. So I think, the flexibility and being able to speak to that top of mind is most important of all. So, Sirk, let's talk a little bit about the business model specifically. Like, you get into the nitty gritty of what it is this entrepreneur's company is going to do, and how it's going to make money for these investors.
Yeah, the nitty gritty is the right way of describing it. So this is kind of where we explain how we're going to make money, right? And so first of all, on the technology side, we should be talking about kind of where we are in the process and how far along the way we are. But ultimately, the technology is there for a reason, right? Which is for us to sell it, market it, sell it to a lot of people, and make a lot of money. And so that's kind of where we have to ask ourselves, okay, what is our model? And this is where we start doing a bit more of a bottoms-up approach, right? To kind of marry the serviceable, obtainable market with kind of what we're going to do to actually hit those, to address that market. And so it's, looking at questions like, what is our channel of sale going to be? Is it going to be partnership based? Is it going to be internet advertising based? Is it going to be, is it going to be word of mouth? Is it going to be social media driven? We have to ask those kinds of questions. What kind of pricing? Have we thought about what potential competitors are doing, or if it's a new kind of technology where we could eat into what someone else is doing as a value add, to what others are offering. How do we acquire customers, and what's the cost of doing that, right? So you typically see things like customer acquisition cost, or CAC, right, in a software as a service model, and it's you need to look at kind of unit, in some cases, unit economics, right, of what's it going to take to acquire a customer, how long is that customer going to stay with us, what's the lifetime value of that customer versus what it costs to actually acquire that customer, and all that kind of rolls into a business model and a case for a business model that suggests that that either we have a real great opportunity to really expand this market quickly, or we've got a good plan. If it's more of like a distribution type of model, then we've got a plan to be able to, hey, here are the distributors that we're going to go after. Here are the retail channels that we're going to be going after in this order and in this time frame. And all of that then has to kind of, dovetail into a financial model that will then also dovetail into the serviceable, obtainable market. So that it's all one cohesive message that says, hey, here's the size of the market, here's our business model to attack that market, and these are the financials that are going to roll into what we're trying to do. And ultimately then, obviously looking at the financials is where we're going to be able to see kind of the return and what the investors are going to see as a potential return on their investment as they think about investing in our company. But understanding our model, understanding how we go about making money, is obviously something that we have to know cold, right? The investors are going to ask a lot of questions about this, whether it's at this presentation or as follow-ons. We have to know this stuff cold, not only for day one, but month 6, month 12, month 24, and so on, of how we address the market initially and how we continue to grow our presence and our sales numbers.
Yeah, so what Sirk said is spot on. Knowing your model is really critical for you to be able to talk about it during this presentation. But with that said, do not include, as we kind of stated before, a big Excel spreadsheet on this slide of two or three slides going through your detailed revenue model and so on. In an initial presentation, folks probably don't want to go into that kind of detail. Have it ready and make sure that the numbers that you've worked through in your business model support what you're saying, because you may be asked to get into that detail. But remember, you're trying to keep things brief and kind of a discussion about the company. Don't don't present a detailed model in this presentation. Just have it ready and make sure it supports what you're saying.
Yeah, agreed. Absolutely.
All right, so Alaa, let's can you talk a little bit about traction and how they can easily and quickly show that to investors when they're pitching?
Yeah, so I think this slide is really a slide that tells the investor, what is it our keys to success. It could be if you're a SaaS company. I've had a couple of companies that presented a model that actually had no revenue, that was focused on users. And part of the metrics that they were using is a certain number of users that will make them successul. So they were really focused on attracting a subscription base. And their focus was really how to get people excited about their site. And they weren't really talking about revenue until a much later time. Part of your discussion could be a milestone that's revenue based. We believe that we're going to get to a certain revenue model that will either spur a follow-on investment or will get us to the next stage of our company. Or what else? It could be that a certain number of transactions will tell us that we are on the right track or successful, or are being successful. One of the things that you can do is that if you've had operations is to say, here's where we are now. Here's where we plan to be in 6 months, a year, or 2 or 3 years, and relay all that in the kind of this traction discussion. Essentially, what you're saying to the investor: here's how we're going to know if we're successful, or here's how you're going to know if we're successful, and kind of get a little bit more involved into the various metrics. The metrics could also discuss what your competitors are doing to give it a little bit more credibility, especially if you're in a certain segment. And you could then compare and contrast that market metrics to what you're planning to attain. We're planning to improve our recurring revenue, monthly recurring revenue by doing X, Y, and Z. And the standard industry MRR is this, and this is how we're going to improve on it. So this kind of discussion kind of gives a little bit more granularity into your business model, and essentially relays to the investor, here's how we're going to test ourselves if we're successful or not.
Right. So, Sirk, let's talk about the competition and how you're planning on making your business using your secret sauce, features, whatever it might be. How are you going to make yourself stand out?
Yeah, and these are the two, I think the most classic ways of presenting this information. So on the left-hand side, you've got kind of the dimensional one where, you put in 2 dimensions, right? And I'll just pick a couple of them. Let's say you put robustness on one dimension and say ease of use, right, on another one, or something like that. And obviously the goal is to, have us be in the upper right-hand, corner of the quadrant, and then where some of the other companies are competitors, right, and where they reside in this space. That's a classic way of doing it. And then the other one is the feature checkmark schedule, which you see on the right here, which is where you kind of list out the features that are going to be important for users in this space. And then, of course, the idea is that we would check off all of these features, and some of our competitors, may only have a subset of those features. So those are the 2 classic ways of presenting this, but there's others as well, and you kind of have to think through, what's the best way to message to investors, where we stand with regards to competition, or how we see competition, and why we're going to be successful, or why we offer more than the competition. One question I get asked here a lot is, who do I put in as competition? Either I don't know that much competition, I'm kind of new in the industry, or Do I put in, big guys like Google or Facebook, if they ultimately, maybe they're not doing anything right now, but they're kind of, nibbling at the space, or they're on the edges of the space and they could potentially be a competitor. Do we put those people in here or not? And, I always say that's obviously a judgment call. How close are they to your space? How reasonable would it be for an investor to question, whether, this is a space that Google or Facebook might get into, for example? If the answer is it's reasonable, then I would certainly not hesitate to add it. And the other question I get is, well, geez, how do I put in Google as a competitor, and how do I compete against that? And the answer I have to that one is that, look, ultimately, if we're doing our things right, we shouldn't be afraid of a Google. Rather, if it's a big enough space where Google is going to be interested in this space, then we're ahead of the game, and they could potentially be an exit, right? Instead of a potential competitor, they could potentially be an acquirer of the company. So I tell my clients not to be too worried about having a big name on there that's going to scare away investors, right? If anything, the possibility that there's a bigger entrant in the space it probably just drives home the fact that it's a big enough market.
Now, I'll say something on the other side of that kind of discussion. Do not say that we have no competitors. That is like the first warning sign of an investor that you don't know what the heck you're talking about. So anybody that comes in and says there is no competition is probably doesn't understand the market very well. Understanding the market also means that you understand who you're going to sell to. So when somebody comes in and says there is no competitor, they probably don't have an idea who they're going to be selling to, or how they're going to be selling the product. So it's not a either or situation, and just don't make that mistake of coming in. There's always either an alternative to what you're offering.
Excellent.
Make sure you address that.
Yeah, that's such a great point. And here's the other thing to it, right? So either you don't understand the marketplace as well as you should, if you're in the space, and investors are going to pick up on that, or it says the other message, right? If there really is no competition, I would argue as an investor, there isn't a big enough market, right, for there to be competition. If there's a big enough market, there are competitors, or there are people looking into the space. Trust me. That's the great thing about this market-driven society, and where people make a lot of money, is because people are always thinking of problems and ways to solve them.
So I had a couple of great questions come in around this particular topic, and it really plays into what you mentioned there, Alaa, with the competition. And if you're, for companies that are doing like true disruption and are overturning, very established, entrenched ways of doing things, how do you provide, a list of competition if what you're doing is so revolutionary versus the status quo? Do you list those companies, those entrenched, blue blood type of companies that have been doing it the old way, and then make the distinction, during the slide? How do you guys typically see that, or help entrepreneurs prepare for that?
I think that's exactly right. You do put the current way that people are doing it, the disruption that we're providing, and that makes I think on the feature by feature slide, that's a perfect way to describe that, right? Is put in all the features that we know are going to be important as to why the disruption, we're going to be able to disrupt this old way of doing things, and why it's so much better. These are all the features that we provide versus what the current people, the legacy folks, are doing now, and why they're lacking, and they're not going to, and why they're not going to be able to compete once we're actually in the marketplace.
In an indirect way to answer that question is that if you are that much of a disruptor, and that this solution hasn't been presented before, you need to come in with some examples of how your disruptive either technology or your product has gained traction. because unless your pitch is so novel that all the investors just open their eyes and say, aha, you need to kind of show them by a couple of examples. So if you're in that space, you might have some real world validation that supports your argument, and will make your case a little bit stronger.
Okay, great. So, Alaa, and Sirk, the favorite slide for you guys on the CFO side of things, and I'll throw it to you first. Telling the company story with numbers, and we're talking, the financial plan, revenue projections, models. Let's jump into what the entrepreneur needs to be putting together for this deck.
So typically the financial slide is that it's it's one slide that I typically advise my clients to make it a kind of a very general P&L side, which is a 3-year financial plan. You might include a quarterly for the first year. By P&L, it's profit loss statement that kind of shows revenue, if any, your gross margins, your operating expenses, and typically I'd like in the presentation just to do it in buckets: sales and marketing, engineering or operations, and general administrative type expenses. Your EBITDA, your projected EBITDA numbers, your operating profit, and then your bottom line number. I also don't really advise clients to get into a detailed balance sheet discussion, but perhaps key balance sheet items like cash or cash flow items, like that's really critical, I think, is operating cash burn, or other items like amount of money that you're planning to raise, so the capital structure, or if there's any debt. Whatever highlight in your financial on your balance sheet that you think is pertinent, but without including the complete balance sheet is in the presentation, is really what I recommend. And then base that model on the bottom up projection. Now, I don't want to get into the details of the differences between a bottom up and a top down financial model, but a bottom up essentially is how it sounds. You're going to start from the details. So your revenue might include your actual sales pipeline, or it includes the actual customers that you're planning to address. And your gross margins might include some of the actual cost of revenue that you're planning to incur, or the head count is a description of, or the cost of the hiring plan for the first year. Top-down financial model, it just takes kind of general assumptions and then does projected growth rates. So you could, for example, your sales and marketing number could be a percentage of revenue, or it could be a growth from the prior year. But typically that you want at least 1 year of bottom up and 2 years of top down to be presented. Now, in your presentation, you're presenting kind of a summarized version, but like I said before, make sure that it ties to the detail, because what you don't want to happen is after this meeting, somebody's saying, send me your financial projection details, and have the two not match. So the credibility is important here. And so make sure that the model kind of makes sense. Kind of a little self-serving message here in your financial model or your financial slide. If you're an entrepreneur, you probably don't have a lot of accounting or finance experience. So here's a great opportunity to involve somebody with that knowledge, just to make sure that your presentation makes sense. Remember, your audience probably sees lots of these and is really well versed in the financial slide. You don't want to start presenting something that looks really, really out of touch, because you lose credibility. So having somebody kind of with that experience look at it before you present it, it's important. by doing that, you'll also have another set of eyes to kind of look at it critically. Like, is your revenue projection realistic? Is your growth rates too optimistic? Is some of your expense projections understated, and so on? So having a financial consultant that may have seen a few of these give you kind of input will help you get a lot more credibility and kind of put a little perspective into your financial model.
So real quick, a couple of questions that come in on this. How, in the interest of simplicity, should we keep it to just like as simple a graph as possible on the slide, and then have this additional information, handy, whether it's, printed out in a folder that you brought in, or even stuck in your head if you're that sharp about it? You almost treat it like, a supplemental material that you call on as you're speaking, or to help answer investor questions. Alaa?
Yeah, so what I always, it's a very simple slide. Typically, it's a quarterly slide for the first year, and then an annual for the subsequent years, with a very general P&L and balance sheet and cash flow highlights. And then I simply say, there's a detailed financial model that we have prepared that is available, that I could send you if you want. So have that available in case they ask for it, because they're not going to sit there and go through your headcount assumptions and your revenue pipeline on the fly. But have that ready and say that I'm happy to share it with you at whenever when requested. That's how I typically handle it.
Yeah, I've
So,
also
do you
seen.
handle it differently?
I've also seen charts as well. I think they work just as well for this at this level. I think if you can show a chart that shows, like, annual revenue, right? Especially if we see if we're actually having revenue now, and we see big increases in revenue over the next 3 years. Revenue projections in a bar chart, right? With accompanied by maybe operating expenses plus cost of goods sold. So we see kind of, especially if in that 3-year time frame, we're getting close to or to break even. There are different ways of doing it. You can probably see lots of slides online with examples. But yes, I think chart works well if it tells a good enough story, and if it spurs discussion and it's compelling, right? So if the chart is compelling, then I think that it's absolutely a viable way of showing numbers.
Great. So, Sirk, let's get to the part of the deck where we end up asking for the money, the most important part, the call to action.
Yeah, absolutely. You got to ask for money, right? You got to talk about how much you're asking for. If you've already kind of raised, if you're doing convertible debt, for example, and you've already raised some money, you should talk about it. If again, kind of what the valuation or the terms of your round. Again, if you're looking at convertible debt, if you've got a cap, a valuation cap on it, a discount rate. If you already know terms, obviously state those. The big bullet point on here, to be honest with you, is the fourth bullet point, right? Which is the milestone financing. So list the things that we're going to be using with the money that we're going to raise, and what milestones we are going to hit with this round of financing. Because if you're going for venture financing, right, typically, and this is the first one, you're going to be going for more, right? Most companies use venture financing as a means to get started and to grow the company. But as they really start to blow it out, if it's the kind of company that is going to have a big future, then you're going to be raising additional rounds of financing. And what you need to show the current set of investors that are looking into this is what milestones you're going to be able to hit with this round of financing, such that you're going to be able to attract a next round of financing at a much bigger valuation. Obviously, creating value for the investors who are getting in today. And so we're huge proponents of milestone financing. Raise enough money to hit some major milestones, which will allow us to get the valuation increase that we're looking for in advance of the next round of financing. I'll just kind of keep it at that level, just because I know we're kind of running over here, because there's obviously a lot here. But yeah, ask for money. Tell them what you're looking for.
Ask for the sale. That's right.
Yeah, that's right.
So, Alaa, let's just as kind of an overview, as a bracket to, we went over in the beginning, just kind of run through some tips on the pitch itself.
Sure. So I think I mentioned this briefly before. You're there to make an impression. Just because you're an incredible entrepreneur and you have a great product and you know your business really well, that doesn't mean that you present the best. So if there's somebody in your team or somebody that you know that could pitch or present your pitch better than you can, let them do it. So put in your best pitcher. Don't put in just the person who's put the team together. So that's really, really key. Know your numbers well. Be prepared. You can never be over prepared, because inevitably you'll get asked questions that you probably didn't expect. So the audience that you're pitching to, remember, is typically very, very savvy. They know how to ask questions, and they're there to evaluate your performance. And the more credible you are and the more knowledgeable you are, the better you're going to be able to present. So you'll have a lot of times an audience that is, will just want to put holes in it. I don't know if you've ever seen Shark Tank, but that type of thing actually happens. That kind of confrontational approach, and you may get that. So be prepared. Don't get emotional. This is business, and be as professional as you can. So you're there. A lot of entrepreneurs are so involved in their product that they start getting into the detail of what they're making or what their product is, and don't talk about the overall company. The investors are not only investing in the product, but they're investing in the team. And I think we've brought that up ad nauseam. So pitch the company, pitch your team, pitch your vision, all these kind of surrounding items to the company is really important. Be succinct, be brief. We've talked about that in great detail. And be knowledgeable of your time. Typically, these guys will give you, at best, an hour, but typically it's a half hour to do your pitch. So make sure you create time to address important points to your presentation, and don't get bogged down in one item.
Awesome. So that's going to kick us over to the Q&A piece of this, and we've got a couple of questions that have come in already. So we'll hit those really quick and then wrap things up. One question, and Sirk, I'll throw it to you first. The video demonstration. Do you see companies that are dropping in a video demo in their pitch deck, or even investors that are asking for such?
Yeah, we see it all the time now. That's getting more and more popular, especially if you're able to, do a 2-minute video as an introduction to kind of introduce the idea and introduce what we're doing. Yeah, we see that a lot. I don't know that we get asked for it. It's just kind of more a matter of put your best forward, right? We get investors asking. Investors just want us to put our best foot forward and give us the presentation that we want to give. And to the extent that that includes a video, sure, why not?
All right, and yeah, I'll throw this other question your way, because you mentioned Shark Tank in those types of pitches. Do you see or have heard of investors that they want the pitch without any kind of deck or presentation involved?
I actually
Which is kind of it's like Shark Tank style, right? You're just kind of standing naked in the breeze there in front of a group of very savvy investors and having to just keep it all in your brain, and that sort of setup. Yeah.
So a pitch is not necessarily a document. A pitch is not necessarily in my day, pitches were done on in a 3-ring binder. You'd hand out this 3-ring binder to everybody, because even projection wasn't readily available a lot of times. So, things evolve. So just know your audience. Maybe your audience is a angel investor who just wants to hear your story. So the idea of a pitch being a presentation it doesn't necessarily mean that it has to be a PowerPoint presentation or a video presentation or anything like that. It's the elements that are within the presentation are what matter. So whenever that discussion happens, the pitch presentation, just be ready to have it. And a lot of times going through the formality of putting it down in a document helps focus your presentation skills. So if you're ever asked to do something like a Shark Tank on the fly, these kind of things may be a lot easier given the fact that you've presented it. I doubt that a lot of the Shark Tank people just kind of walk in and wing it. So I've never encountered it in the Bay Area technology world where people kind of come in cold and just talk without anything, but it may happen, and it probably happens in an informal setting. But some of the elements we talked about, I think, probably will still persist, and you should be ready for them.
Okay, great. So we'll wrap it up right there. Thanks to everyone for joining us. Alaa, Sirk, thank you for providing your insight and wisdom as always. A recording of this webinar will be made available to all registrants. Within 48 hours, you'll get an email with that information in it. So in the meantime, thanks again for joining us, and have a great rest of your week.
Thank you, everyone.
Thank you.